historically in the world, has there ever been a default? Like, can the U.S. just say, we're not going to pay our debt and we're going to...
Sure, there's been lots of defaults. The 1998 Russian default comes to mind. That was sort of triggered by the long-term capital management meltdown, which triggered the Asian contagion, the Thai baht. It was all like a chain reaction. And the Russian default, and when you look at the currency devaluation, I believe it was either 1,000 to 1 or 10,000 to 1. I just showed a chart on it yesterday. So, you know, you've got an old ruble and then a new ruble, but they repudiated their debt. They didn't honor their bonds. So yeah, that happens. That's happened a lot.
So could the U.S. get to a point that say, we're going to start from zero, we're not going to pay our debt, and we're going to start a new currency, for example?
Yeah, and I think that that's the most likely scenario. In the 70s, you know, that was a very different bull market. We were in a Kondratiev summer, not a Kondratiev winter. We didn't have these crushing levels of debt. We had a trade surplus instead of an enormous, the world's largest trade deficit. It was a very, very different time, and you saw a bull market in precious metals that went through the normal three stages: the stealth accumulation phase, the second phase where all these new instruments are developed to be able to invest in it, and the public is hearing about it, and then the third phase, blow off top, where it's the no-lose investment, and everybody's telling everybody else that you got to invest in gold. I don't expect that this time we will go through that. We will have a progression like we have had over the past decade, and then there will come a day where when you look at these emergency measures that the Federal Reserve, the Treasury, and the Securities and Exchange Commission does and stuff, what happens, like the long-term capital management meltdown, is there's an emergency that's going to potentially kill the global financial system. I mean, we came within hours of the financial system freezing up and nothing working. No more credit cards, nobody being able to go into a bank and get their funds, all currency flows stopping on the planet. We came within hours of that with the long-term capital management blow-up. But what happens is these guys that think they're masters of the universe all get into a room, and they're there for maybe even a couple of days. They work all night long, and they come up with some solution, and they force some banks to acquire this thing and bail them out and get things going again. The public doesn't hear about it until after it's done. What would happen most likely is that there'd be some huge blow-up that they're trying to keep under wraps, and you wake up one morning and gold is $8,000 an ounce or $15,000 an ounce, and the dollar is once again backed by gold. The U.S. does have one of the world's largest gold stockpiles. Per capita, actually, Germany is the richest country measured in gold. You know, but the very fact that the central banks are now net buyers, and even in this pullback, they're buying, and a lot of the public is selling. That should tell you that there's something up. What they're doing to the currencies can't go on forever. You know, Japan is the perfect example of it just absolutely proves that Keynesian economics doesn't work. They keep on trying to print their way out of their deflationary problem. They've been trying it now for 24 years, and it hasn't worked. So they just keep on doubling down on what they were doing last year. It doesn't work. And so, but in Japan, they had us, the United States, to sell to the whole time. They had this big buyer of their goods. If the U.S. goes into a big deflation, what do? To whom do we sell?